Well, hello and welcome to Earnings Express. I'm your host, Nikki Machandani. Tata Consultant Services will officially kickstart the IT earnings season. This will be the first quarter under the new CEO, K. Kirti Vasan, who will be addressing the earning conference directly. But how would IT sector stack up for the quarter? What are the expectations from TCS, HCL Technology? Let's bring in the editor of Technology, Startup and New Economy, Chandra S. Shrikant, to talk about this and more. Good morning there. I'm going to start off by asking you about the June quarter, which otherwise is expected to be the strongest quarter for the sector overall. But this time around, it looks like could be different due to the deteriorating macros. How are you reading into it, Chandra?
Thanks for having me on your show, Nikki. As you said, quarter one and quarter two are traditionally supposed to be strong quarters for IT companies. These are also the quarters when they onboard a lot of freshers, and the first half is traditionally considered to be better than the second half for companies. But this time around, that's unlikely to happen. Going into the results today, there is a sense of pessimism among the analyst community and the street. If you look at the way TCS and HCL has been trading ahead of their earnings. So as you said, TCS is going to be a muted quarter. In fact, as per estimates that we've been seeing, it's expected to be muted in a seasonally weak quarter, and it's possibly going to be the slowest June quarter in a decade, excluding COVID. So apart from that, this is possibly going to be the slowest June quarter in a decade. But TCS, apart from business reasons, has leadership factors also to look out for. As you said, this is going to be Kirti Vasan's first quarter as CEO, which he will address. So people will look for a lot of commentary on, what his feedback has been from client meetings. He's been very busy making trips to the US and Europe. What's the feedback he's getting on the ground with respect to spends? Is there going to be any strange change in their strategy? And I'm sure people will also expect them to clarify on the recent bribes for jobs issue. Is it completely behind them? We also did a story yesterday on how they've been deferring lateral hires. So I think people issues will also take some importance in the earnings press conference and results today.
Sure, we're going to get on to that in just a bit, but I wanted to understand from you first, what's your assessment overall on the revenue growth profile of these companies? Do you expect more growth coming in for tier 2 companies as compared to, say, a large cap counters in this quarter? Just the trend perhaps that we noticed in the previous quarter?
Tier 2 companies benefited from the pandemic because they were more nimble and agile, and they were able to take advantage of the increasing spend on digital. But right now, if you speak to analysts, all of them are talking about vendor consolidation, and vendor consolidation usually works to the advantage of larger companies in such a scenario where discretionary spend is coming down and clients are holding back on new spends. So I think vendor consolidation is going to be a theme. Also, TCS won some deals this quarter, but they have largely been renewals. So deals are happening, but the nature of deals, how many of these are renewals versus net new deals, that's an important metric to track. As far as revenue growth is concerned, if you look at the estimates for TCS, dollar revenue growth is expected to inch up by about half a percentage point. It's expected to come in at 7.2 billion versus 7.1 billion in the previous quarter. EBIT margins are expected to see a decline by about 110 basis points at 23.4% versus 24.5% in the previous quarter. So those are some of the estimates we are working with. There's unlikely to be fireworks this time around. I think analysts have priced in more or less muted growth and weak commentary for large companies.
Sure. I also wanted to chat with you about what do you think about the the estimates that are around for margin? You think the hit can be lower than expected for the quarter, given the companies like Infosys have already started deferring in the pay hikes for employees, which is also one of the factors which is expected to weigh down on the financials of these companies. You think more companies could follow suit?
We'll have to wait and see, but we are seeing a larger trend around the people side. So companies have been deferring onboarding for freshers, and that brought down the average variable pay payout for companies. For instance, I think Infosys brought it down to 60%. And if you look at Wipro, they came back with a revised offer letter that offered lesser money than the initial offer letter. So companies clearly under pressure amidst a deteriorating macro environment. They're finding every way they can to save costs and ensure that margins don't take a hit amidst weak growth. So, from what we understand, delays in onboarding are happening across the board. So, we'll have to wait and see what their commentary is. And I think one more very important metric to track is net headcount addition. How many people they have added in the last quarter? Has that, again come down? What is their hiring guidance like for the rest of the year? Those will be important to track as well.
Sure. Chandra, let's narrow down our focus now just to TCS, because those are going to be the big numbers apparently which are going to set the tone for the IT pack. Let's talk about the revenue profile. What are you making out of it? Because most of the brokerages are saying that it could be the slowest growth that we've seen in almost 12 quarters coming for TCS. But what are going to be the other things that one should watch out for within the financials? Chandra?
For TCS. If you look at the specifics, dollar revenue is expected to come in at 7.2 billion, an uptick of 5%. EBIT margins are expected to decline due to the wage hike coming into effect. If I look, within industry segments, the company has already flagged off weaknesses in some of their biggest verticals. This includes BFSI, which is banking and financial services, retail, communications, and North America, from which they derive a significant portion of their revenue. So they've already flagged off weaknesses there. So there will be questions around whether they are seeing discretionary spending cuts, projects being put on hold, if companies have started opening up IT budgets. But on the other hand, we have also seen deal wins coming for TCS. For instance, they won some significant deals during the quarter. This includes Nest, Marks and Spencer, their deal with Phoenix Group, the $1.8 billion BSNL deal, and one that they won with the teachers' pension scheme. So, as far as their TCV for deals are concerned, it's estimated at 11 to 12 billion, which is a year-on-year growth of 34 to 46%. So the deal trajectory continues to be pretty strong for TCS. But again, we'll have to get granular details from the management on whether these are largely renewals. How is the net new deal addition looking like?
Sure, that's the word coming in. And also, since you are tracking the space so closely, Chandra, any specific commentary from CEO, of course, will be really widely watch out for. But any expectations from the CEO commentary that you have for us?
I think people will wait to hear what Kriti Vasan has to say, considering this is the first full month since he's, completed. Since he's been CEO. So what the first month was like, what is his feedback when he meets clients? Will he go ahead with the reorg that Rajesh Gopinathan had proposed during his tenure? And I think if there will be any larger strategic shifts for TCS, for instance, this morning we saw Wipro announcing a massive $1 billion investment in AI. They've also said that they are going to train 2.5 lakh people on AI over the next 3 years. So what is Kriti's strategy as far as generative AI is concerned? How big is TCS going to go in that area? How they're going to train employees? So I think those are some of the other factors to watch out for.
Also, a word coming in on HCL Tech. Broadly, what are your expectations for HCL Technologies as well?
I haven't had a chance to look at HCL Tech's numbers, but analysts we've been speaking to say that they expect a muted quarter from HCL Tech as well, because they are also seeing pressure in some of their business segments. But we'll have to wait and hear from the management on granular details around margins and revenue growth. But multiple job candidates we've been speaking to have also told us that HCL Tech has also been dealing some of this onboarding. So I think that's going to be an industry-wide issue that we'll have to see. But HCL Tech, TCS, we just have to look at the way their stocks have traded ahead of their earnings. Analysts clearly are expecting a muted quarter this time around for IT.
That's pretty much it, Chandra. Thank you so much for taking out the time and speaking to us. HCL Tech, and if you look at TCS, they aren't really doing much in trade today ahead of the earnings. As Chandra rightly highlighted, it's going to be a muted quarter, which is expected for the entire IT basket, which officially kickstarts not just the IT season, but also the entire earnings season put across. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below, and follow us link at the bottom of your screen. And for rest of the update, stay tuned into moneycontrol.com and Moneycontrol app.